SPLG ETF, a deep dive into the SPDR portfolio SP500 ETF. In the vast ocean of exchange-traded funds, ETFs, SPLG, commonly known as the SPDR portfolio SP500 ETF, stands as a titan. Tracking the SP500, one of the most widely recognized market benchmarks, SPLG offers investors a simple yet potent tool for gaining exposure to the heart of the American equity market. But beyond its surface simplicity, SPLG boasts a depth of features and considerations worth exploring for any investor seeking a holistic understanding of this popular fund. Demystifying SPLG, Origins and Fundamentals. SPLG debuted in 1993, pioneering the ETF landscape as one of the first funds to passively track the SP500. Issued by State Street Global Advisors, SSGA, a behemoth in the asset management world, SPLG has amassed a staggering $75 billion in assets under management, AUM, as of January 2024. This hefty size translates to unparalleled liquidity, making SPLG an attractive choice for investors seeking frictionless trades and tight bid-ask spreads. SPLG, like its benchmark, tracks the performance of the 500 leading publicly traded companies in the United States, weighted by market capitalization. This composition offers investors a diversified exposure to various sectors, including technology, healthcare, financials, and consumer staples. Notably, SPLG is a passively managed fund, meaning it simply replicates the SP500 index, aiming to deliver its returns, minus a minimal expense ratio of 0.02%. Performance powerhouse, SPLG's track record. Over its nearly three-decade history, SPLG has served as a reliable barometer of the American stock market's performance. Its long-term returns have closely mirrored the SP500, averaging around 10% annually since its inception. While past performance is not a guarantee of future results, SPLG's historical track record of delivering consistent, market-matching returns solidifies its position as a core holding for many investors. However, it's crucial to remember that SPLG is not immune to market downturns. Its close correlation to the SP500 implies that periods of broad market volatility will be reflected in the fund's price. Nonetheless, for investors seeking long-term exposure to the broad U.S. equities market, SPLG's strong historical performance and risk diversification offer a compelling proposition. Beyond the basics, key considerations for SPLG investors are: while SPLG's simplicity can be alluring, a deeper dive reveals nuances that merit investor attention. One vital consideration is the underlying methodology of the SP500 index. Its selection criteria and weighting methodology can potentially tilt the composition towards certain sectors or companies, influencing SPLG's overall performance. Furthermore, SPLG's focus on large-cap U.S. equities implies limited exposure to small-cap or international companies. While this provides stability, it also restricts diversification potential. Investors seeking broader asset allocation may need to complement SPLG with other holdings. Tax implications deserve consideration as well. SPLG's structure results in dividends being distributed to shareholders, potentially triggering tax liabilities depending on individual circumstances. Consulting with a financial advisor can help navigate these aspects. Alternatives and comparisons, the ETF landscape. The ETF universe teems with alternatives to SPLG, each offering unique features and nuances. Several competitors track the SP 500, such as IVV and SPY, offering comparable exposure with slight variations in expense ratios or dividend reinvestment strategies. For investors seeking broader diversification, multi-asset or sector-specific ETFs can complement SPLG. Additionally, strategic beta ETFs offer alternative weighting methodologies within the SP 500 universe, targeting factors like value, growth, or low volatility. Ultimately, the choice between SPLG and its peers depends on individual investment goals and risk tolerance. Carefully assessing a fund's features, underlying index, and fees is crucial for making an informed decision. SPLG, navigating the future waters. Alternative assets and the changing investment landscape. The emergence of alternative asset classes like private equity, real estate investment trusts, REITs, and cryptocurrencies presents another wrinkle in the investment landscape. While SPLG offers exposure to traditional equities, investors seeking additional diversification might consider incorporating these asset classes into their portfolios. However, these alternatives often come with higher risks and require meticulous research and due diligence. Sustainable investing and ESG considerations. Sustainability and environmental, social, and governance (ESG) factors are increasingly influencing investor decisions. While the SP 500 itself is not explicitly focused on ESG metrics, several other ETFs track indices that prioritize sustainability criteria. Investors aligning their values with their investments can choose such alternatives while maintaining exposure to the U.S. equities market. Robo-advisors and the democratization of investing. The rise of robo-advisors, automated platforms offering personalized portfolio management, makes sophisticated investment strategies accessible to a broader audience. These platforms often utilize core holdings like SPLG alongside other assets to construct diversified portfolios tailored to individual goals and risk tolerance. This trend democratizes access to professional investment advice and potentially expands SPLG's investor base. Technological advancements and the ETF ecosystem. Technological advancements continue to reshape the ETF industry. The launch of thematic ETFs targeting specific trends like artificial intelligence or renewable energy offers investors granular exposure to emerging sectors. Additionally, blockchain technology and tokenized assets could potentially revolutionize the way ETFs are issued and traded, impacting SPLG and its peers in the future. SPLG's enduring appeal. Conclusion. Despite the ever-evolving investment landscape, SPLG remains a powerful tool for gaining exposure to the heart of the American stock market. Its simplicity, liquidity, and track record of delivering market-matching returns make it a cornerstone holding for many investors. However, understanding its nuances, considering alternative assets, and keeping abreast of industry trends are crucial for navigating the complex world of ETFs and making informed investment decisions. By meticulously assessing their investment goals, risk tolerance, and alignment with emerging trends, investors can leverage SPLG's strengths, while strategically utilizing other asset classes and investment tools to build a robust and well-diversified portfolio poised for growth in the years to come.